everybody, welcome to the TraderMerlin show. Hope you're having a fantastic day out there. Sorry, my camera's all a mess today. Colors are all over the place. It looks like a total mess. And I can't see anybody's chat, so we'll have to play it by ear and see how things go. But anyway, I hope you're all doing great. Today is a result of a lot of different listener questions regarding time frames and trading styles, so I'll do my best to accommodate all of that today. And hello, oh, there we go. Now I got my chat. Hello, Les, Kenny. Good to have you with us, Kenny, Eric, Mario, Brian, Tomasina, Laura, Tom, Katut, and Meznok. The regular posse out here on a glorious Tuesday afternoon. And you were right, Lori. For some reason, my calendar didn't show Squares reporting yesterday. They actually reported yesterday. So I was wrong. For some reason, I thought it was later on this week. Maybe they mixed it up on me. Who knows? Yes, I got a solid tan today. It's funny how it's this auto white balance thing my camera does. Unfortunately, it just screws it up. That's why I miss TJ. One of the many reasons I miss old TJ, my chart master, to do everything for me. All right. Again, you guys know the rules. If you have questions, do a few question marks before those. Send them on to me, and hopefully I'll get to all of them on today's show. Today is going to be something that's actually pretty near and dear to my heart. I struggled significantly when I first started because I saw something that somebody was doing, and I said, I have to do it that way. That's what I want to be. But I kind of realized it wasn't for me in the long run, and that just really goes back to the concept of trading style. So I thought today would be kind of fun to do a trading style show. So you can see here we've got kind of four main groupings of trading styles. You've got day trading, swing, position, or scalping. And for every one of those, there's going to be some pros and cons. So I'll talk to you, at least share my experiences on the four styles, as well as kind of build out a table for you so you kind of know some of the bigger pros and cons of each one. Hello, Lufthansa. Hello, Susan. Hello, Terry. Good to have you with us again as well. All right, so let me start things off quickly by going through what happened out there in today's markets. We had some nice action, specifically with the cryptocurrency space, which, of course, the regulatory talk is heating up, and I think that there's going to be a lot more of it happening. So Bitcoin was your worst performer, as you can see here over the last couple days. Been a pretty ugly sell-off, down 2.77% today to 38,000. It was up over 41. I think it was actually kissing 42 just a couple days ago. And now we're back at 38. The nature of the beast. Now, crude oil, they reported earnings today. Or not reported earnings. How does crude oil report earnings? Crude oil did not report earnings today, but we did see a sharp drop here in crude oil coming back down towards that 67 mark, which we kind of outlined. You know, it's interesting because yesterday's action came down towards that 70 mark and somewhat bounced off it. Let me see if I can get my, there we go. Zoom out a little bit for you so you can see it. Just a little bit of a continuation from that sell-off we saw yesterday and over the weekend. You know, does it get all the way back down to 66.80? Yeah, it's very possible that we do see it get back down at 66 mark. We'll have to just wait and see. If we get down to the 66 mark, I'll probably reevaluate. As I told you guys, I'm somewhat bearish on crude oil right now, given what's going on the macro political side with COVID, as well as with the production increases coming out from OPEC. So a lot of negative stuff on oil right now. We'll see if that continues to push it past below 66. All right, gold. Not a good day for gold either. Continuing its slow drift down here over the past 4 days. 1813 is where we closed at. And anything below 1800 will probably cause me to want to jump ship, at least a close below 1800. As you guys know, I am long on gold right now. Let's see. I'll skip the 10 here because I didn't do much. Russell 2000, which has been a hot topic for just about everybody in this group. A lot of people thinking very bearish on it. Well, again, the yellow box tells us it's just range bound. In today's action, really no big deal. 0.14% increase to 2214 on the Russell 2000. All right, NASDAQ, one of your better performers on the day. Still didn't break out of its range. We were kind of looking at this as a symmetrical triangle, kind of a little bit of compression here with regard to the NQs. Right now, up 0.55% to 15,034 for the day. So that's your second place. And the best, again, running right back up towards all-time highs. 4408 for the S&P 500. That's a gain of 0.66%. And it's not about for me anyway, that this was a loss today. Yes, it was a losing day for me. Why? Well, if you look at the 5-minute chart here, I was all set and loaded to go short as soon as this thing broke the lows of the previous day. And as you can see, if I put a line across the lows of the previous day, you go to the futures here, that's 43.77. Now, right on the open, you saw it ripped down, had a nice, little gain there, and then just came screaming back up, and pretty much did nothing but go up all day. So unfortunately, ended up stopping me out and really frustrated me. But it's okay. It happens. You get stopped out like that. Unfortunately, I didn't have time to sit in front of the screen all day and manage and maybe capitalize on the upside move. But nice rip up for the equity markets after that initial market sell-off, breaking the previous day's lows. Same thing here with the NASDAQ, right? We talked about the NASDAQ breaking lows. Yeah, well, that one got me too. So, well, no worries. We'll move on to bigger and better things. Someone is going to say you don't know what you're talking about because you said crude oil was reporting as of course. Let him talk. I could care less. It's so funny because I received, when I started doing power trading radio, and that was 2010. We did power trading radio. I think we started April 1st of 2010. I had this guy a guy named Larry, who was from up in the Bay Area, who was just one of the most miserable people. Like, every day the guy would send in some hate mail. And if you saw some of the things this guy would send me, I can't even repeat it. I guess I can because it's not an online trading academy show, but I'll be nice and not repeat the whole phrase. But I since have memorized his use of words in this one just horrible sentence to me. And for a while, it actually tore me up, beat me up, and really, I don't know, I let it get to me. And then I realized there are so many trolls out there. I know what I do, so it's fine. If people want to hate on me, that's cool. I just delete them from my community and hopefully don't have to work with them. Let's see. Let's go to this part here, which was the choosing your trading style. So the reason I want to go into this is based off of specifically a listener question that came in on the topic, and there was two of them, and I will show you both of those right now, and then I'll go to the trading styles. One came in from Heather, who has been asking me a bunch of stuff lately. Here's Heather. Says, what's your thought on scalping? So I'll talk about scalping, which to me is a dead breed. And then you have this one here, which is from Scott. He says, can you help me with a chart question? For swing trading, how far back should you look? Swing trading is holding for a couple of days. Do I look at the last 5 or 6 bars or 5 or 6 months? Looking at price from 1 year ago seems excessive. No? I'll answer all those in detail as I go through this grid. Oh, what? Jay Best, thank you so much, man. I appreciate the contribution there. Thank you. Didn't have to do that, but always appreciate that. Love when you guys donate. It always makes my day. Makes me feel like I'm doing something right. Although I guess the fact that you guys keep coming back every day tells me I'm doing something right. Lori said I'm old now. I don't care what anyone thinks of me. Yeah, exactly. It's tough when I guess when you're starting out doing a show, because it's funny because I'm trying to keep it level with regards to what we talk about on the show, meaning I'm not going to polarize myself and say, hey, let's be hardcore Republican or hardcore Democrat or bash this style, or even go bash certain people. Now, there's only one person I will bash, and I think he deserves every second of hate that comes his way. Other than that, let to each their own, do your own thing. You know what that's bad for? That's bad for subscribers. If I wanted to have like 50,000 subscribers, what I'd have to do is I would have to polarize myself one way and get so much hatred generated that some people would love me because I'm on that side, and then the other half would hate me so much because I'm on that side they watch every day just to throw shade at me. That's how a lot of these guys get really popular, but yeah, not my style. I'll try to keep it real. So, to make it easy, and again, I'll talk about my thoughts on scalping as well as the swing trading timeframes. I thought I'd build a matrix for you, and I'm going to do this one live just because I think it's going to be easier for me to do that. Now, let me grab my drawing pen here. So I'm going to start off with scalping. First off, to Heather's question about scalping, I personally think scalping is really dead unless you're an HFT or high-frequency trading company. Scalping is dead. What is scalping? Scalping is where you have the bid and the ask, right? So on most securities, you have a bid and ask price, which is kind of the wholesale and retail buying prices. So if you're going to buy it at market, you're going to pay the ask price. If you're going to buy it at the bid side, which you might be able to get it using limit orders, that's like buying wholesale. And the difference is the spread. So with scalping, it was predominantly used on things that have kind of a wide spread. So when I got started back in the late 90s, scalping that's where it was at. I mean, these spreads were over $1. So I could buy it at the ask for, let's say, $50, and then I could go and post an offer to sell, or sorry, I could, let me rephrase this. I could buy it on the bid at, let's say, somebody was there at $50, I'd go 50 and a penny, just slightly above him. And then as soon as I got it, I would flip over and offer it out on the ask selling for, you know, $50.99 and making like 98 cents in the process. I was just simply cutting the spread because the spreads were massive. Nowadays, the spreads are, you know, 1 penny or less on some of these securities. So scalping to me is pretty much dead. That said, what did it entail? What were some of the key things with scalping? Why I kind of broke it into 4 separate categories. You can see at the top, and hopefully this works for me. We start off with size. So that's the quantity of shares or contracts that you're trading. The stop losses, basically so we get an idea of how wide our stops need to be. Duration, meaning how long you're going to be in the trade. And then frequency, meaning how many trades you're going to do. Now, to set the stage here, when I got started I started in 96 doing long-term position trading because I saw people doing this, and this is really what I wanted to do. I was like, man, you guys basically buy something, you don't really monitor it much at all, and you just let it do its thing, and, you know, weeks, months down the road, you harvest your gains. What I found out is I was incredibly impatient. So as we progress through this, one thing I would encourage you to do is, number one, get a piece of paper and write down some of the characteristics about yourself that you notice. Are you a very laid back and easygoing person? Are you slower? You know, do you take your time with things? Or are you like me, where I'm rush. I got to keep going. If I'm not moving, you know, I feel like I'm missing opportunities, or I'm just not doing what I should be doing. The other thing that you could do is go take a Big 5 personality test. There's a bunch of those for free, and answer those questions as honest as you can. Don't lie on those questions that a lot of people do to get the result they want. But if you take the Big 5 personality test, you'll see that there's some certain areas that'll show your strengths and weaknesses in, and those may lead to areas of trading. I think, for example, one in the Big 5 personality test about organization. Well, if you're not an organized person, trading's probably going to be rather tough, right? It's about process, it's about structure, it's about routine, and to me, organization is key there. So if you know right away that your weakness is organization, you got some work to do. So Big 5 personality test, I think you can just go to Google or YouTube or Google and type it in. Take a free one. You don't have to pay for these things. They'll always try to upsell you something, but you can get a bunch of free ones out there on YouTube or Google, excuse me. So let's talk about scalping. So as far as those 4 criteria that make up scalping, with regards to size, you're looking at massive. I mean, you're huge. I'm gonna just type. Is it gonna write? There we go. Massive. And what I mean by that is, let's say I'm gonna do like this could be like a 5,000 shares. I know I'm gonna use it from the equity markets, kind of how I did it back in the late 90s. I'll just 5,000 shares. And you're like, holy cow, that's crazy. It is. Now, why is this so important? Because remember, when I'm scalping now, I'm no longer enjoying wide spreads. The spreads are like a penny, or, you know, let's say a couple cents. So if I'm going to sit at the bid side, and let me see if I can, I'll create one more slide here, and I'll modify it here to show you what this means with regards to scalping. This is kind of critical. Let's see, I'll add it right here, a new slide, and I will go to that one for you. Okay. And there it is. So if we have the bid, so stab nabbit. I'm just not used to this drawing tool, guys. Sorry, I know I'm messing everything up. If you have your bid, so there's your bid, and that member is like, let's say there's $50, then you've got $49.99, and then you got $49.98, etc. And over here you have your ask. Okay, and that's all your sellers in the marketplace. And let's say somebody wanted to sell it at 51. Well, now I have a $1 spread. That was back in the late 90s, right? That's how wide those spreads were. Now you've got like this. It's like 50, 97, and then over here you're going to have 50, 99. So this spread is gone now. Now it's 0.02 cents. So if I wanted to, I could potentially try to scalp this. And let's say that I put a successful offer to do this with, let's just say 100 shares. Because like, well, I don't want to trade a lot. I want to be safe and trade a little bit. So let's say I do 100 shares, and I ended up getting 100 shares at 50.97, right? So I joined this party over here, right? I joined these guys. I got filled. Now I'm long 100 shares. And I go immediately and go to offer it out at 50.98. Meaning I'm the best seller in the marketplace. I'm selling it for lower than anybody else in the world, and I get filled. All right, so I bought it at 50.97, sold at 50.98. 98. And that means my profit is what? I made a penny. Wow, big deal. Great. So did I make any money? Not really. I made a penny on 100 shares. That's a big deal. I made $1. Who cares? That's a waste of my time. Unfortunately, this is the nature of scalping. Now, you remember back in my day, these spreads were wide. They were really wide. They were like $1 wide. So I could go out there. Let me see if I can. There's a race. Oh, I think I can just do it this way. There we go. I can take all this stuff out. Cool. Hey, this drawing tool is not too bad. This might have some potential here, right? So back in the day, if you think about how I did it back then with scalping, it was much, 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 much different. So we can go back to the drawing tool here. And let's say this was $50 again. I could jump over here and buy it at, let's say, 50.01. And I was doing it regularly with 1,000 to 5,000 shares. So let's say now I do it on 1,000 shares, right? So I got 1,000 shares. I buy it at 50.01. So we'll just go L long at 50.01. And I would flip over here and immediately try to offer it out. Sell it at 50.98. Great. So I'm going to make 97 cents profit on that trade if I get filled, which means I'm making $970. I think everyone would agree that is a way better profit. The challenge is, as I pointed out, it's gone. So you're doing a lot of trades. You have to trade huge share size. So this right away requires you to have a lot of money. Now stop losses. Stop losses are extremely small. So I'll just write EX. Tough to write, guys. I'm still learning. Extremely small. Meaning, like, if it went against you like a penny or so, you're jumping, you're out. Duration, you're talking seconds. These are not long trades. I'd be in trade sometimes for a second. I'd buy it, and if it's second I got it, I'd flip over and sell on the ask. Frequency, you're doing hundreds of trades. I mean, you're doing a lot of them. And this, of course, adds up in a lot of commissions. So for me, I really do believe that scalping, do you use share bars? If yes, how many bars? Nope, I don't. I don't use share bars, Alvin. For me, it's just pure, the standard stuff that everyone's looking at. Standard price charts and standard volume at the bottom. All right, so you guys can see why, for me, scalping is dead. First off, if you're going to try scalping, you got to have massive account size because you have to trade huge share size to do it. And now because of technology, those spreads are a penny. And because of HFTs, those spreads are less than a penny. Scalping is dead in my opinion. We'll just kill it. The next one on here is one that I love. I am a huge fan of it. Now, share size, it's not going to say it's massive, but you're certainly looking at larger generally. So we'll just say a large share size. Let me get off the eraser here. Large. And I'm going to say roughly, 1,000 share blocks. I used to do 500 to 1,000. That would be what I considered my day trading size. Stop losses are going to be very small. Why? Because I can't afford to take big losses when I'm trading 1,000 shares. I mean, if I took 1,000 shares and I lost 25 cents, I lost $250. So my stop losses were rather tight. And of course, all of this is based off of average true range. I'd be analyzing the average true range and supply zones to see if my likelihood of being stopped out was increased based off that supply zone. And of course, I'll answer any questions as we progress here, so keep asking. Duration, this is simple. It's for the day. There's no exceptions here. You are out by the closing bell, period. Now, again, when you look at something like cryptocurrencies, there is no closing bell, right? It's 24 hours, so how do you define that end? Make it by the end of your day then, if it's something that has a 24-hour market environment. If you're trading something like futures or Forex that have unique characteristics around their trading day where certain, like for example, Forex, yes, it's 24 hours, but in that 24-hour window, you don't really get every time slot being very active. And then there's overlap time periods where certain times actually have more trading activity, more liquidity, and generally better price action. So you start to learn the characteristics about the different instruments that you're trading. So as far as frequency goes, for me, I was doing a lot. At one point, my maximum here, I know you guys will just freak out. I've told you this before. My max was 880 in one day. My average from 98 to about 2000 was 550. And I would say now there's no way I would do any more ever than 20 trades a day. I just realized the cost to me was so huge from a day trading perspective. Now, if we look at those two, scalping versus day trading, obviously the capital requirements to be a day trader is high, but not as high as being a scalper. I'm gonna draw lines through scalping because I think scalping is just dead and we should all ignore it. Get rid of scalping. I love day trading for a couple primary reasons. Number one, I don't trust these markets. Number two, I don't trust the news. Number three, I don't trust my politicians. Again, that phrase that I've told you before, non mi fido di nessuno, means I don't trust anybody. In the financial markets, it's probably a safe place to be. So I would much rather be out by the end of the trading day so that I don't get caught off guard off some stupid announcements or some crazy whipsaw merger or something that happens. Day trading to me is peace of mind. I'm already an insomniac. I have a hard time sleeping anyway. So if I have positions open, I think about them a lot, right? You constantly want to check on it. Ooh, maybe that Australia rate announcement that came out, maybe that can impact my gold because I'm in gold and Australia's a gold country. That type of thing drives me nuts. So day trading is great from that perspective. However, the statistics and data show of those that could create the data, and there aren't too many studies out there, the statistics show that day traders lose money more often than not. And why is that? It goes back to what I've always preached here on the show, which is trading's not about making money, it's about losing it. And unfortunately, when you're trading a big block of shares like day traders are supposed to do, they may let a loser run a little longer than expected. And again, when you got big share size and you let something run, those losses can mount up very quick. So the key for anybody who is looking at day trading is losses, losses, losses. That's the probably the most important column in here. Is not the size, it's not the stops, it's not the duration, it's not the frequency, it's stops. It's how much you're going to lose on each trade. Trust the guy that trusts no one. Thanks, Tom. Let's see, there are a couple questions. Merlin, this topic couldn't come at a better time. I'm a break-even trader overall. When I review the trades, I noticed that it's difficult to pinpoint how to improve when I'm at work during prime. Again, you've heard me say this, Medic, a lot, which is you should be journaling and analyzing and finding out what's working. There's some things you cannot explain. Like to this day, I cannot explain to you why the vast majority of the stocks that I would trade back in 98 to 2000, I would lose on almost, not all. I lost on a lot of them. I just didn't find a groove. And for some reason, E-Trade, Juniper, Broadcom, and even KLA-10 Core, these are companies I traded for years and had just very good success. For whatever reason, there was some connection between me and the trading action there. I can't explain it. I don't know why. I don't even care. As long as I can do the analysis and say, wow, I'm making a lot more money with this stock versus this stock, or this futures contract versus this futures contract, I'm going to focus on the one that's making me money. I'll talk more about that at time permitting on kind of my trading style and how I developed it. And it ties right into that. It's just a valuation of markets in my trading. So, Medic, my only comment there would be you got to do as much analysis as you can. And there's two. Don't focus on the ones that break even. Forget about that stuff. Focus on the extremes of the curve. What's your extreme winners look like? Why did that happen? But the most important thing is your extreme losses. Where is your biggest drawdown coming? And once you figure out your losses, then you can start to break it apart even further by saying, here's the one that I have the highest percentage win ratio. So now I can do two things. If I find the security that I'm trading the best, right? So let's just make it up and say I trade Microsoft the best, right? If you find that that's the one that you're doing the best on, then you apply the same basic rules you were doing before. Find which one you have your best success rate with. If that's not Microsoft, it's something else, then try to combine those two, right? Try to find out what's working for Microsoft and combine it with the one that you have your best success with. If you find that you have, let's say, a 30% win rate on your Microsoft trades, but you're making the most money there, that's great. But I'd much rather find something that I have a 60% win rate and I'm making very little. Why? Because if I got a 60% win rate on a security, whatever it is, and I can analyze that and say, okay, now let me work on letting my winners run here and managing those losses a little better, maybe setting up some risk management trail stop type techniques, then all of a sudden that 60% win ratio becomes much more valuable to me as I scale up my size and I increase the wins and decrease those losses. And all of a sudden I could be looking at 75% win ratio, and now you're talking. So that's all about analysis. I mean, it's hard to say, oh, well, do this, Medic. Just do this and you'll be fine. That's not the way it happens, right? It's every one of us, everybody here in this room right now is doing things slightly different. Even though you may have taken we could have all have sat in the same online trading academy class. We could have been. You could have all been my students at one point in the same class, learn the same thing, same rules, same talk track, same stories. Yet you're all going to go out and do things differently. That's just the nature of trading, right? You apply rules differently. Your attitudes, your personality comes into play, and all of a sudden, you start deviating and creating your own path. And there's nothing wrong with that. You just have to monitor your path and progress along the way so that you don't fall off the rails. Alvin said, which futures market is my favorite? Indexes. I know it's so boring. I just love index futures. S&P, NASDAQ, Russell. Those are the three primary that I trade. I'll throw crude oil in there every now and again. I trade gold as well, but that's pretty much it. When it goes to currencies, I'll flip-flop between spot and going into the futures, but yeah, I'm predominantly indexes. Okay, so that's the basics of day trading. Again, the big risk there is you're looking at much bigger share size. And Alvin, I will, oh wait, not Alvin, Mesnok, I'll talk about ATR here in just a sec. Yep. I'll get to it in just a minute. So from there, it's tough because you have to really be introspective and be honest with yourself. I mean, if you can't call yourself stupid, then you're probably not going to make it as a trader, because every single one of us is going to do some seriously stupid crap. And you're like, man, you idiot. Why did you do that? Don't start blaming everybody else. When I got started, it was so easy for me to point the finger like, Goldman Sachs, damn you, you took my money. It's like, no, I screwed up. It was my fault. Goldman's just doing his job. He didn't even know I exist. I'm a mosquito in his world, a gnat that just bugs him. So the thing we have to all be is very honest with ourselves. If you know that you're doing something wrong, admit it, write it down, track it, and change that thing before it tears you apart. So for those that are looking at the day trading side of things, one other piece I don't have on here is personality type. If you got a cat, there's always these videos of cats, right? That like they sit there on the desk and there's a glass there and the cat just looks right at the camera and just goes bloop, and throws the whatever, let's call it a glass of water onto the ground. Are you the type of person that's going to catch that glass before it hits the ground? Or are you going to let it shatter and just kind of look at it and go, bad kitty? Personality types. I'm the type that's going to catch that glass before it hits the ground. I'm very quick. Day trading, you have to be quick. There is no room at all for delay in your responses. So you have to know exactly what to do and exactly when to do it, and you cannot break your train of thought there. If you do, things are going to get away from you. The big challenge here I think a lot of people face is set and forget orders are great. And for those that don't know, set and forget orders are simply where you put your entry, stop loss, and your price target in the system. It's hard to do that as a day trader, especially if you're trading something that's very volatile. You're trading Google or Amazon or Facebook, these ones that have some pretty good volatility. You're not going to put in your stop, entry, and your price target. Just most likely not going to happen. So you start to play with fire there if you take those things off the table and remove the risk management side and do it manually. Now you have to trust yourself. And I see way too many day traders violate that trust and let things run. Let's see here. What do I got? So let's go to the swing trading. Let's see. Did I miss some stuff? Probably going to go back to MNQ. Okay. Made an adjustment to my strategy on trade management. Good. Yeah, exactly. And Kevin, I like that you're doing it for a month. I think another challenge here is when people tell you to change something. So in trading, it's always about adapting and saying, okay, I'm going to try to make this minor change. One thing I would suggest, I'm glad you brought that up, Kevin, is if you have a style and you've done your analysis, so you go home after the show and you're like, okay, I heard what Merlin said, I want to analyze my trading, and you run through and you see there's like 4 things that you're doing, you think that you're doing wrong. Don't change all 4 of them, right? Make one change and then try that for a while. Try it for a month and see how that goes. If your success increases, then great, that one thing worked. What I've noticed happen all too often is someone will go and change all 4 of those things at once, and then they get a totally different result, but you don't know which change had the greatest impact or how that change impacted your trading, right? So not only how much of an impact, but what was the impact? I may have done this one action and it completely changed another piece. So I like adding in one piece at a time, letting time, a month is nothing in the grand scheme of things when you look at your life as a trader or investor. If 1 month means that you can do this forever and do it successfully forever, then it's well worth it. We're just impatient and we want immediate results. That's a huge challenge. All right, so let's get on to swing before I run totally out of time here. This is one of my personal favorites. I love swing trading. The question that was here earlier, just let me bring that one up here real quick just so I can see it and have it in front of my face. This was from Scott. He says, can you help me with chart question? For swing trading, how far back should you look? Swing trading is holding for a couple of days. Do I look at the last 5 bars, 6 months? Isn't 1 year a little bit too much? Okay, I love swing trading because, yes, these are trades that are going to be lasting a few days. So we'll go here and say duration. We'll just say days to weeks, right? Because it could actually be an intraday trade. So let's go days. Oh, Merlin, come on. Days to weeks. Yeah, and I guess you could potentially say months, but let's just say day to weeks. And really what a swing trade is saying, I've got my defined entry point, and a target, and I'm going to stay in it until it hits the target or my stop loss. So that could happen in 1 day. It could happen over days or weeks or months. So we'll call it day to weeks. Generally, your share size is going to be medium, right? It really depends on your account size, but I'm just going to put medium down here. Now, of course, this totally depends on what securities you're trading. Or of course, if you're trading Amazon, well, you're looking at thousands of dollars per share. If you're trading, something that's a double-digit stock, well, you can buy a lot more of it. So size really depends on what is it trading. But generally, this is going to be something like 100 to 500 shares. Of course, again, this is all just boilerplate. It really depends on what is you're trading. Stop losses. Now you're letting your stop losses run a little bit here. I'll put medium. Oops. It's tough to talk and write at the same time. When I say medium, I know it sounds subjective. Again, what this means is that the stops have gotten bigger. Why have they gotten bigger? Because when I'm day trading, I'm really looking for very short snippets. I'm not trying to catch a 5-point move in a day trade. I'm trying to catch maybe 50-cent move. So in order to make money there, I have to trade a much bigger block. If I'm swing trading, I'm now looking for that $5 move. Well, I can't make a $5 move with the same stop loss that I would have as a day trade. Does that make sense? I need them to be a little bit wider. And that goes back to the comment or question about what time frames to look at. So when we look at price charts, obviously if I'm looking at day trading, 5 is the shortest time frame that I go, which is right here. But I have a daily, a 4-hour, an hourly, a 15, and a 5-minute chart, just to look at different perspectives of all of those different animals, right? And they're all very different in the way that they function. So day trading, 5 minutes. If you're looking at swing trading, you should really never even be looking at this chart. You're probably starting off with something like a daily. All right, so I would be looking at the daily to start. I know some people like to look at the weeklies and go a much bigger time frame here. Matter of personal preference. So for Scott out there, you were saying, should you look at the swing trading's holding for a couple days? Do I look at the last 5 or 6 bars or 5 or 6 months? You look at whatever you need to. Don't limit yourself to a specific number. You need to look at whatever it is necessary. So for example, if I look at this NASDAQ here, all right, well, this is enough data for me to look at. And I just know it because I've looked at so many of these charts. But if this was any other stock, I would already start going back to weekly or monthly. Why? Because I need to see if there's anything off to the left-hand side of the chart which may be acting as supply, an overhead area where it could stop turning. Of course, we all know the NASDAQ's at all-time high, so that's not an issue. But if I were to look at something like, let's go to, everything's at all-time highs right now. Let's go look at KLA Tencor. All right, so to your question initially, if you said, do you look back to 5 or 6 bars? Well, if you look back 5 or 6 bars on KLA Tencor, you're not seeing anything that helps you formulate a trade. You got to go all the way back to March or April of this year to find that it in fact came right into supply at 350. Now let's see if we can find some other situations here. I'm going to click through different charts just for fun. That's a garbage chart. This is a good example too. This is ticker symbol WLTW, which is Wallace Towers Weston Publishing. I'm guessing I'd never heard of them either. But in this situation, I have to look at more data, right? Because even though it's on a beautiful downtrend for the past few months, I still need to know where that demand zone might be forming. So I'll look at whatever I need to. Now all of a sudden this picture looks very different. It looks actually pretty attractive. Man, tell you what, that thing came right down to 199. You talk about a solid bounce off of 200. Oh man, look at this. Let's go snap mode. I'll throw this on the line right here is where have been my buy point, 199.95. And the low that we saw of 5 days ago was aggressively falling into the zone. It went to a low of 199.78, which is right around that $200 mark, and been ripping ever since. So there's a good example of looking at what you need to. So Medic says GE. Yes, good old GE. Well, GE's, we looked at this one the other day. Flatline, right? I'm not interested in GE. I don't need to look at much. It's just been going sideways. But let's see, what else do we have here? GIS. No. Ooh, I believe the other day you guys were talking about cup and handle formations. United Health Group has got a real nice cup and handle right now. Take a peek at that chart. Beauty. That's a nice cup and handle right there. Not only is it a cup and handle, you could argue that's an ascending triangle. This looks pretty darn good from a bullish perspective on United Health Group. Now, of course, it is a $420 stock. That makes it a little bit rich for a lot of people, but there you go. So I mean, talking about my ascending triangle here, or cup and handle. Yeah, you got a nice cup and handle. Anyway, this, for those who might be new, we were talking about cup and handles on the show the other day, and William O'Neill's and Bollinger's thoughts on cup and handles versus W formations. So yeah, Scott, really for me, trading time frames with regards to scalping, I have to look at whatever information is necessary. So here you go. He says, looking at price from a year ago seems excessive, no? Well, take a peek at this Yum Brands, right? Yum Brands has gone absolutely gangbusters over the last 2 weeks. Well, I'm going to actually have to shift this over to a monthly just to see, has it ever been here? And the answer is no. Okay, fine. But at least I could look back there. And if I saw a price level that goes back 5 years, let's use that Yum Brands as an example. Let's say Yum was rallying aggressively right now, and there's a hypothetical supply zone from 5 years ago. Would that be important to me? Look, let's be honest. In reality, the orders that were there 5 years ago are not there anymore. No trader has an order still pending from 5 years ago. Oh, shoot, I forgot that one. Not going to happen. But from a technical analysis perspective, Scott, if there is a level from 5 years ago and markets are ripping up and looking for some place to stall, every trader who's into technical analysis, even fundamentals really, is going to look at the huge picture and say, oh, wow, there was a level from 5 years ago that this thing sold off from, and it's coming to it right now. You know what? Use it. Base a trade off that 5-year-old level. 10-year-old level, use it. 20-year-old level, if it's all you got, use it. And it may sound stupid because the principle of core strategy and supply and demand is you're looking at buyers and sellers lining up at a specific location, right? It's unfilled order flow that's at those spots. And yeah, there is no unfilled orders from that time frame, but as it revisits that price, new orders will come in at that price level. Hopefully that makes sense. Okay, so let's see. I got Heather's question about thoughts on scalping. I think it's junk. Scott, you say how far back should you look? Again, look as far as, I'll bring the question up. Go as far back as you need. Yes, swing trading is holding for a couple of days, maybe a couple of weeks. And you said you look at the last 5 or 6 bars or the 5 or 6 months. Again, for me, it's about different time frames. So for swing trades, I'll also look at weeklies, I'll look at dailies, and I'll look at the 4-hour time frame. If I'm really looking for an ideal entry, I'll look at maybe the hourly to really time and refine my entry. But I try not to get into the swing trading stuff. I try not to get in the weeds and torture myself with those small time frames and the minutia. It'll drive you nuts. All right, so we got one left here. I think actually a couple little modifications here, and then I'll go into whatever questions you guys have on trading styles. So obviously with regards to frequency, it's pretty low, right? You're not doing a lot of trades when you're doing, let's put LOW on that one, when you're doing swing trading. It's about finding the right trades, being very selective in it. Now, let's go to positions. Position, it's probably you're less than 100. And again, all depends on account size. But I'm just putting less than 100 to give you the perspective from what we've got here. And the reason for that is you've got to trade really small share size because your stop losses are large. You're going to be using larger time frames. You're using weeklies and monthlies here to determine those price patterns. So your ATR might be based off the weekly, and that could be a very large amount. So you're going to have larger stop losses. But of course, that said, if I'm looking at swing trading, right? And let's say I've got a $1 stop loss. Well, I'm probably trying to make $3 or more. If I've got a position trade with a $5 stop loss, pretty big, I'm shooting to make $15 or more. So I'm still trying to keep that 3-to-1 reward to risk ratio at a minimum. I'd rather shoot for 5 or 6 or even greater, but I'm trying to keep it realistic by going 3-to-1. I think that ratio still applies. So with scalping, or let's just start with day trading. With day trading, if I'm trying to make 50 cents, let's call it 75 cents, just to be easy for me. Well, my stop loss should be around 25 cents on that one, and then I have to analyze the ATR. When you get to ATR, please clarify how it's calculated. Sure, no problem. So with regards to position trading, duration, we're talking months. This could be years. I know there's a lot of people who watch this show that are into that long-term stuff. Not usually for me. Months. Momps. I spelled it wrong. Oh well. Frequency, very low. Right? You're tying up your capital for a long period of time. And that's why I don't like position trading personally. All right? And we look at the pros and cons to all these. If you're a position trader, you could be in something for 2 years. Well, what if you're in a losing position for a couple years? It hasn't quite hit your stop loss, but it's just kind of going sideways and drifting down. Every time that I was in that situation where I was in a losing trade, but the plan was long term, all of a sudden other trades would just pop up like crazy, right? It was just like, oh my God, all these great opportunities. I'm like, shoot, my capital is tied up in this long-term position trade. So if you're going long-term position, make sure that you have a good reason for it, you have the justification for it, and enough capital set aside so you can find other opportunities if they do pop up. So, trading styles. The biggest challenge for me is not just the style, it's making sure that it fits your personality. Again, if you're someone in that analogy where the cat knocks the drink off the table and you catch it right away, you're probably going to be okay with the shorter term time frames where you have to make decisions super fast. If you are slower and that glass is going to shatter on the ground and you pick it up a little bit later on, maybe swing or position. Which one's better? I don't know. I would probably say swing because swing is probably the best place for people to start. Why? It's a little slower. You can apply all the core strategy pieces. You can take time to map out your zones, your stop losses, your price targets, and you can go a little bit slower in that process. Day trading, you're forced to move quickly. So I would say start with swing or position, and then as you feel comfortable, maybe put a little money aside for the short-term stuff and try it. It's not for everybody, and it's very difficult. And again, statistics tell you that a lot of people lose. 2008 crash is a perfect example when it hit demand zone near 666. Yes, I love the old 666 on the S&P. Wasn't that nice? Seems like so long ago. All right, so you have questions on any of the styles, send them on in. I will go over the ATR. Holy cow, this is a long show today, and it's hot. I can turn my fan on in here. So when you get to ATR, please clarify how it's calculated. Well, I'll show you real quick. Let me add ATR on the bottom of my screen here. I think I have it all set up. Oh, distractions. There we go. So here is Yum Brands. Let's go to a daily, make it a daily, and man, look at this Yum Brands chart. So basically what this is looking at is basically saying over the last 14 days. You can see over here on the side it says 14. If you look at TradingView, I think I can actually bring TradingView up for you guys. 1 second. We have TradingView here. Let me add on ATR. Where is it? Oh, I thought I had it all set up here. Unfortunately, I don't have ATR on this chart, but I'll try to add it on real quick just so you guys can see it. Average, true range. And again, you guys can use it on TradingView for free. You notice down here at the bottom, there's my average true range. It doesn't give me all the details here. I wish it did. I could probably add those in. But, the default's 14. So what we're looking at here is really 14 bars worth of data, and it'll take the range, meaning the difference between its high and its low, for each of those bars and divide by 14. That's pretty much it. It's kind of like a moving average where it takes the closing price over the last 14 or period of time, 20 days, and then averages those. So here, this is where you have to constantly be adapting because notice the big move up here. I mean, we went from an ATR on the 13th of July. The ATR was only $1.37. It's at $2.98 today. ATR is well over doubled in just a couple of weeks. This would need to be adapted into my trading plan or trading style. So let's say we look at something like GLD, right? And you think, oh, well, what should my stop loss on gold be? Well, if you're trading GLD, which is $169.50, right now on a daily, you're talking $1.31 stop loss, right? Is there, should you do it less than $1.31? You could, but just understand that it's moving $1.31 per day. That's its average. It could move more, it could move less, but that's its average for the last 2 weeks. Actually, almost 3 weeks worth of trading. So this is how we're basing the stop losses off. And of course, if you take core strategy, you get more into the mechanics and kind of how to tailor your stop losses based off ATR. But that's what it's calculated off at Mario. It's calculated usually off of 14 bars, and it takes the range of each of those bars, comes up with a number, adds it together with the other 14, and divides by 14. There you go. Merlin, do you have any recommendations for options trading instructors who offer their own class? I'm already an OTA student. I spent some time with Tim Blotzer, whose class I love. I know there's a lot of great people out there. I've had a bunch of people on the program. I mean, Felix, if you're an Online Trading Academy graduate, you have access to a pretty good pool of instructors. I would retake the classes as often as you could. I know that there's Russ Allen, you got Larry Jacobson, you have Sean Reed. There's a rotation of instructors, and I would try to take it with as many different ones. see what the online schedule is, and maybe you can retake it with different people. That would be my first thing, rather than going and spending more money at a different school, which no problem with that. It's just that's another expense you'd have to take. But there's a lot of good people. I brought a few of them on this program. I think if you already spent the money, you might want to just stay there and utilize as many of those resources as you can and get more and more involved in there. But let's see. Yeah, Tim Blotzer was fine. Corey Lane's been on the program a bunch. Those are kind of the two main options, guys. I'm thinking they're on the show. Yeah, Brandon's more futures, but cool. All right, let me go to the calendars here, and I'm going to wrap things up since I'm going way long today. I just not expected to go this long, but glad you guys enjoyed it. I'm hoping you enjoyed it. Here's what we have for tomorrow with regards to earnings. A couple of big names in here, actually. You have CVS and General Motors reporting earnings. You have Roku. Remember, Ford looked real nice with their earnings, and that may be setting the tone for this market going forward. But Ford jumped nicely and essentially given back those earnings. Let's see. What else is... Corey Lane would be good on. Bashir is awesome. Bashir is great. Josip Chausic as well. Yep, absolutely. Josip's brilliant. Josip's one of these guys like Rain Man. He's a math teacher. He's a former math professor, and if you think of options, it's all math. So yeah, I don't know how I missed Josip, but you have Josip, you do have Paul Orm, you got Jeff Manson a little bit with options. That's not his. He's really the futures master, but Bashir's on a whole another level. Bashir and Josip are just brilliant guys. Bashir does a lot with the strategic investor. And it's awesome. If you guys saw him at the symposium, he was just brilliant. One of my favorites. So let's see. We had Western Digital, Etsy, Kraft Heinz reporting tomorrow. Also, again, getting into some of the energy companies, Marathon Petroleum and Electronic Arts reporting. As far as economic calendars, it's a pretty big day for services around the world. You can see for the euro, they've got Spanish, Italian, French, German, and the euro services numbers coming out, along with Italian retail sales and retail sales for the entire euro. I think Jeff Manson does a little bit. He tinkers with options, but that's not his forte. I would say that his forte is futures. And then what else do we have down here? You've got final services for the U.S. Crude oil inventories tomorrow, so keep your eye on that one, especially given what's been going on with crude oil. It almost feels like the price chart is foreshadowing a bad supply number here. You can see that obviously it's only 2 days worth of data selling off, but at 70.56. To me, that 66.80 mark is a ripe target, and any real bad supply news tomorrow could drop this thing even more. So be careful. That's coming out at 7:30, so 1 hour into the market open, and that's pretty much it. Rob, hey, thanks from across the pond, my friend. I really appreciate it, and all the support you've given. He's always supporting me on social media, even though I'm the worst social media person on the planet. Hey, appreciate all the help. That said, I think we've covered economic announcements and earnings. I don't have any guests scheduled for the week. Yes, I know I should get Greg Manarino and others on the program. I know, Tom, you're probably going to hook me up with some guys here soon. Bring them on. I love talking markets. And actually, I did get a comment. Someone is saying, why don't we interview students? I have no problem interviewing students. To me, there's got to be some benefit, some value added. So I actually had a student reach out to me and said, hey, I'd love to come on and talk about the market. So I may do that here in the near future to talk kind of maybe what that student journey looks like and what are some of the things that they've learned along the way and how they've helped their trading career. So... man, sorry, Big Ab, no hour show, 49 minutes. I'm going to wrap it up at 50, guys. That's going to do it for me for today. Teresa, good to have you with us. So glad I was able for you to watch that show today, too. Don't get to new followers. Hit that subscribe button. It'll pop up on your timeline. You can also hit the, I think there's a show alerts button, which will alert you every time that I do a show, which is going to be every day, Monday through Friday at 2 p.m. Pacific time. Do you think crude is correlated to the market indexes? I don't. I think there's a disconnect. I think that the manipulation in the equity markets, while the Fed is definitely cranking up spending, and so is our government, crude oil is not as impacted by that. That's going to be more driven by supply and demand. So as the economy does well and we come out of COVID and we drive more, great. I think that is a good thing, and then that should in fact get us driving, and then of course demand for crude oil will increase, which should do what? Should drive the price of oil up. But if COVID starts to get worse, which it's starting to look kind of ugly again, another cycle coming through, then all of a sudden we go back into quarantine, we go into lockdown, no travel, crude oil is going to go where? It's going to go down. So in that respect, there's some tie to it, but I don't think it's that correlated to the indexes. Anyway, thank you guys so much. Lori, you requested Merlin? What are we talking about? Requested me? For what? Yeah, you guys wanted me in like some clubhouse session or something? We'll have to see about that one. But email me. You can email me at TraderMerlin@gmail.com. If you have any questions, comments, feedback, anything else, again, TraderMerlin@gmail.com. Hopefully I'll get to all those questions. And thank you all that sent in those questions. For those of you who might not remember, Heather and Scott, you steered today's show. So thank you guys so much. I will see you all tomorrow. Take care.